Well, hello there, Mavericks. This is Rob Reinhold. It is June 29th. We have 1 day left of the month. Let's jump into what we're going to be talking about today. In this session, we are going to be breaking down today. What happened today? What was some of the news? What were the market internals? We'll take a look at the sector heat map as well. We're also going to cover current market analysis. We're going to look at the markets again with a fresh set of eyes. Say, okay, has anything changed? If it's changed, we're going to be updating that outlook. And then last, we're going to be looking at specific trading setups and opportunities. We'll take a look at some bulls, we'll take a look at some bears, and we'll take a look at some sideways trades as well. Maverick hires traders just like you to trade with the firm's capital. You get to keep 70 to 80% of all the profits you generate. If you are good, we give you more money to trade. If you want to come trade with us, click in the links in the description. We are specifically looking for options traders that have at least a year of experience. Find the apply links in the video description below. All right, so today in the markets, we had a generally up day in the markets. So let's talk about some of the news that was moving first. We had the bank stress test, the yearly stress test that they put all the major banks through. The results were reported yesterday and they all passed. Now look, it wasn't a great news. It was expected that they all passed, but it was one of those things that could have sunk the market. And now you can just check one more thing off the list of potential concerns that the market has. We also got U.S. first quarter GDP. I know that's a while ago, but this is the final number. They revised that higher to 2%. Estimates were for 1.4%. So look, this is a 2% growth economy. That's a decent economy. We basically had 2% growth all through 2010 through 2020, and the stock market did just fine. And today you can see the Dow Jones was up 0.8%, S&P up about 0.5%. The Qs underperformed. They're just tired. They vastly outperformed everything. We'll take a look here at the heat map in a second. It was time for them to take a break. Small caps that have been very weak, they got a bid, up 1.1%. Oil up a little bit, still hanging out around $70, and gold flat on the day. The internals today, slight advanced decline lines, so 61% of stocks going up, and you can see about 59% of stocks above their 50-day moving average. So ultimately, it was a generally mild up day, nothing exciting like we've seen in the past. If we take a look at these charts, we had this breakout in the middle of May where we got bullish +3. We had a run up, we had a high base, we had then a parabolic run. We said, okay, it probably needs to cool off a bit. We got that pullback, and we've been saying, look, I know you may not feel like buying this pullback, but you have to buy the pullback when it triggers. And you can see Tuesday was that trigger. And if you take a look at these last three candles, these aren't the prettiest candles you've ever seen, but look, they're opening up at the bottom, closing at the top. It is showing you that this is bullish price action in the S&P. For the first time in a while, we're seeing the Qs actually underperform. Same thing, we've been on a rocket ship up for the Qs. We had our pullback. We got the buy signal on Wednesday on the Qs, and you can see today's candle wasn't a great candle compared to the S&P. Okay, look, this is still a bull pullback. They don't go just straight up off a bull pullback. Things are still more generally bullish on the NASDAQ and the Qs. That being said, we do think that the Qs are likely to underperform because they've outperformed. Qs are up like 38% for the year. Likely takes a little bit of time for them to go significantly higher. And if we take a look at the heat map, this is about the opposite of the heat map we saw last week where all of the big cap tech were green and everything else is red. Take a look at it. Big cap tech is red, everything else is green. And check out the financials. The financials responded very well to those stress tests today. Big moves up in a lot of those financials. So if we take a look at where we started the week, we were at a +3, and we were generally, again, we were saying that the market was likely to pull back at the first part of the week and then bounce in the second part of the week. This is literally what has actually happened here. So going forward through the end of this week, there's no reason why tomorrow isn't another up day. We have no idea if it's going to be, but technical analysis says we should see another up day here. So we're going to stick with our bullish outlook. This is a bullish outlook in stocks. If you are unfamiliar with Maverick Trading, we are a proprietary trading company. Now, proprietary trading means that a private firm hires traders to trade with their capital. And you trade for the firm, And whatever you make for the firm, we give you a percentage of the profit. 70 to 80% goes back to you. Good traders, you get more capital, you can trade higher amounts, you can take bigger positions and make more money. Maverick Trading, we've been based in the USA. We are 25 years old. If you're interested in trading for us, click one of the links in the video description to apply for an open trader position. Let's take a look at some possible setups here. We have a lot of bulls, some neutrals, and I actually found a decent amount of bears. But look, this market's bullish. You want to be bullish. So let's focus in on the bulls first. First trade I've got for you is DraftKings. DraftKings looking at a nice ascending triangle pattern here. Resistance was right around this 26 area, and you can see we've just been creeping up, creeping up, creeping up. Okay, this candle is not the prettiest candle you would like to see. You'd like to see that close up at its high, but look, it broke out. It's been building a base now for a month and a half. If you're looking to at least go out a couple weeks on this trade, I think you've got a good opportunity here. 27 would be a short-term target. You could do a 26-27 bull call spread. That'd be a very, very simple trade. Probably paying about 35 cents. So you got 35 cents of risk, 65% upside. And this is one of those rare times where if you were looking for just a straight long call, look, it's a +3 market. We got a breakout of a 1.5 month high base on a strong stock. I think it makes some sense here on DraftKings. Next up on the long side, this is in the financials. I think the financials are starting to pick up a little momentum. They looked really terrible last week. They look good today. We'll see what happens with them tomorrow. But this one bottomed out a couple days ago, well before the sector did. And you can see this is just a nice classic bull pullback. We had this little base in here. We broke out, and we've had a nice orderly pullback to the breakout point. And you can see the last 3 days have been higher, even though the financial sector hasn't been great. I'm not saying this thing's going back to 17.5. So I think that's a little optimistic here in the short term. But look, 16 to 17, I don't see any reason why a 16 to 17, either diagonal spread, vertical spread. I think this is where you want to be. You could look at even doing a 16, 17, 18 targeted butterfly. But I don't see there's any reason why this thing doesn't float up, as long as the financials stay stronger than weaker. Let's take a look at a sideways trade. Starbucks has been on my radar for a while. Now, Starbucks has completely underperformed. Take a look at the market's been up, it's been down. And you can see that over the last couple of days, Starbucks can't get going here. Now, this trade will only work if the market stays strong. If the market stays strong, Starbucks likely just stays in this range here, 96 to 102. If the market drops, this thing is going to be a good short. I just don't see the market dropping here. So I'm going to take a look at opening up a sideways trade on this one. Look, this thing is pinned at like the 98, 99, 100 area. I don't know where you want to be. It's based on your time frame. If you're looking out just to July 7th, so a 1 week trade, I think next week is likely to be bullish again. I would probably open up a 100 butterfly and do something like a 96, 100, 104 butterfly and really get me right in this area of profit. But you can look at it a different way, different time frames, at different target prices, and make your butterflies up there. But this Starbucks looks like it is not going anywhere in the time being. And for a short, we always got to be carrying shorts. I have a lot of shorts that look okay, like they're going to trigger here pretty soon. But this one triggered today. This is SunPower. They're in the solar space. Look, this thing's been going straight down, all while the market's been going up. This stock has not participated whatsoever. And we had a little bear rally here. Terrible candle today. Okay, we do have some support here at 950. There's no question about it. I'm going out to the 910 July monthly bear call spread. I'm going to get in probably 60, 65 cents. I've got 35 cents of risk. And if this one breaks down and goes, it's going to be a nice short. If not, I've got my limited downside from my vertical spread. Let's talk about tomorrow. Tomorrow, we've got two things happening. Overnight, we get China PMIs. I fully expect that the China PMIs are going to move the futures plus or minus at least 0.5%. China is starting to slow down again, and this could be one of the things that people start to worry about. Then, before the market opens, we get the core PCE price index, the Fed's preferred measure of inflation, at 9:30 Eastern time. Sorry, at 8:30 Eastern time. And that's going to move the market as well. I expect us to have a pretty decent gap up or down tomorrow before the bell even opens. And then, of course, we think there is still more buyers than sellers out there. So if we do get a gap down, we assume that people are going to come in and buy the bottom. If we get a gap up, I could see the market actually selling off a little bit. So I wouldn't chase the gap tomorrow. I would actually rather fade the gap, to be honest with you, if I was doing some shorter term trading. But if you're looking out to 2 to 3 weeks, I think you want to stick with that +3 on the markets. The markets look really good and healthy here. That is the Market Roundup. Thanks for joining me. Goodbye, everyone.